Hello guys, welcome back to this channel. So I'm going to do a trade breakdown that we took today using the following requirement, and these are the checklist. So this is the trade. It is there in my Telegram group. You can join, it's for free. This is the only Telegram group I have, so we discuss here with my people here. So this is the trade I took. You can see it's there. It was more than 1 to 3, but it just took 1 to 3. So this is where it all started. So I'm going to explain after I shall have explained the procedure under which the trade was taken and how it started and then how it all ended. So the requirement is that try and understand 4 hours fractals, highs and lows. Try and understand order flow in 15 minutes. Try and basically order flow. Try and understand market structure, alafu inducements or IDMs, then basic supply and demand, single candle order block, scope, and then you also need to understand valid pullback. Now it is very simple. As you can see, I mark it on a daily time frame. That is why I start my analysis. So the criteria number 1 is that external range, I should be marking it in a daily. Now let me just run you quickly on over what just happened. So let me delete all this and then start afresh so that you can see how I came about the nice trade on London Open. So let's clear everything and then walk you through my thought process. As you can see, the market has been moving upward, and then at some point it reached some higher time frame demand zone, so it needed to pull back. So what it did do, it caused a change of character here and then pulled back, caused another break of structure. So the most protected high was this, and immediately it was raided. We went higher, so we were expecting the price now to take this eventually. We're expecting the price to take this high here and cause the overall break of structure. So this is the overall target of this market movement. So if you're watching this soon, if it has not reached here, try and get trades in this direction. Now, so why did I take trade a buy today? It's very simple. I start from the daily time frame, external range marked in 1 day. Now yesterday what happened? The candle closed bullish. Yesterday closed bullish. So when the candle closed bullish like this, what did we expect? We expected a buys. Let me check on FXCM. I did not even check. I just took trade on Oanda. FXCM also closed bullish, which is nice. So this was our marked trading range, high and low. Simple. Now the next thing is internal range in 4 hours. So let's go to 4 hours. Now the criteria. So we have to mark. We mark on a daily time frame. So this is our fractal high on a daily time frame. And then this is our fractal low, which has already been taken overnight, so no problem. This is the low. Now what about internal range in 4 hours? So what happened overnight? Overnight we had this candle pushed down, and then now it started pushing upwards. So we're expecting upwards. Currently the market is pushing down, is pushing downwards. So there is high probability that now this thing is just going to push upwards, and since the low of this candle and this candle has been taken, most likely we may get a deeper pullback that may even end up resulting in a liquidity sweep again, but that is not our business. Our business is already done for the day. So if I was still looking for trade here, I would still look to see this being taken, because the daily yesterday closed bullish, and therefore my bias is just to buy. So this is how the price moved. So overnight, what did we see? This was the external range high of 4 hours, and this is the low. This was the low. Actually, this was the low. This is the low. This is the low that broke structure here and pushed it above. It's not the clearest 4 hours fractal, but I'll explain further. So this becomes our 4 hours fractal high that should be taken, and then we continue buying, and then this becomes our fractal low that should not have been taken. But since it was taken, we couldn't just buy immediately. We had to wait. So we have to wait to make sure that everything is aligning. So we have to wait. So what do? To get early sales that we're going to take this, we wait for candle to start reversing. This is the first indication. When this candle sold, then the next candle also sold part of it and then closed upwards. What did we expect? We expected that if the selling is to continue, what should we see? We should just be seeing this high being respected, and then we cause another break of structure down here on the wicks. But what happened? Instead, two of them were pushed like what is happening here now. It could be expecting a lot of downward momentum. So after this is the time that London started. So I go to 15 minutes knowing that early buys have started taking place, so I can take my risk. So I go to 15 minutes. I've already marked, let me just say something here. I've already marked my internal range in 4 hours. I've also marked market takes 4 hours fractal low or high aligned to the 4 hour to the 1 day direction. It has started here early. This is the ultimate. This is early because we are seeing now a break of structure on the upside. So this is early. Let's continue. So we go to 15 minutes because now the next thing that is remaining here is the next thing that is remaining here on this checklist is to monitor order flow in 15-minute time frame and IDM zones. So what do we expect? What we are expecting is simple: to monitor the order flow and know what exactly is happening. So let me just use this. This is the first break of structure upward. You can also call it change of character. You can also call it IDM whatsoever. Failed IDM. I like to call it just 15 minutes change of character. And then we have this becomes the sweep. So what happens here? I'm just monitoring the order flow in 15 minutes. So if the market was to continue going low, this was the protected high, and even if it took this as an IDM, we were expecting immediately a rollover down so that it can push again and then continue selling. But what happened? The reverse happened, and then now we started seeing order flow aligning on the upside. So we are just monitoring order flow. So this is the first break. Now I'm waiting for the second break, because it can be breaking like this and then goes downward. So I have to monitor order flow in 15 minutes and then enter in the second 15 minutes order flow, supply and demand and scope. So this is the first break. Now second break is here. I want you to be very keen on pullbacks. Second break is here. Second break is here. I want you to see what happens. The price moved causing the first break, and then the 4 hours has already aligned here. So the market moved upward, moved downward, moved again upward, moved again downward. That is now the third break. So the market is obviously upward. So when London opened, I was expecting it to push to somewhere here, and then we keep buying. So if you remove this, you will see that indeed market has caused more than one break of structure. That means we have already ticked number 5, enter in the second. So since this second place, it was out of my session. Of course, it was also possible to enter here it was out of my session, so I had to wait for London open. So what happened when London opened? I marked everything. So this is my last order flow. So I'm waiting for the price to come. I'm now marking the fifth option. This is where I want to see the price come to it and getting respected. So this is my last order flow, so I'm expecting it. But also nobody said that it must always tap on this, because already we are having high probability. We are having a fair value gap here, so nobody said that price must always tap on the order flow. I even stated that in my Telegram. So I was expecting a pushback down, and then provided I see that break, I am in. So this is the break, 15 minutes up. So if we see another break, that means that this order flow here should be respected, because what I'm trading is very simple. What I am trading is very, very simple. If you understand something called RIMC, basically this is how the price moves. The price starts from ranging. This is the R, and then it initiation, and then it will mitigate, M, and then it will continue. So personally, I trade only initiation leg or continuation leg. Like in this case, we are in the initiation phase. Initiation phase, you will never see it pulling a lot. It just obeys order flow. So initiation phase is always very aggressive and will be obeying order flow. So this was like a sort of range. This box is a range. This is range, and then we get a breakout out of it, which is the initiation leg. Initiation leg only obeys order flow. And that is what I was looking to play. Like in this case, you can see there was a pullback, push, pullback, push. Push, pullback, push, pullback. No lows was being taken. So that was my thought process. So I was expecting this low to eventually hold, but how can it hold up? So I'm expecting this, the price not to take this 15 minutes order flow if it breaks this high. So at this point, there were two options. So this is how I was seeing it. So let's play it. This is how it was. So I'm in this particular section. I'm just identifying supply and demand zone, and then wait for scope and then enter. So I'm in the last part. So I went to 5 minutes, and immediately I saw this break. I took risky entry. This is entry number 1. I got it on this fair value gap. Stop loss could have been here, but that is just being ridiculous enough. So it was somewhere there. Stop loss below this should be respected. Target at least a 1, 2, 3, or eventually if things goes well, no problem, we can get it at that particular point. So it was just slightly below here. That momentum did not scare me a lot. Now this was the risky trade. How I always prefer to do it is that because of London, because of session open, this can sweep me out and then now form my scob. This becomes liquidity, so this forms another scob here, and then we see a push upward, so I'll be the liquidity. So I took an aggressive entry, knowing very well that I can be liquidity. So the right thing to do, I also break my own rules. Sometimes. So the right thing to do was to wait for scob. After identifying this supply and demand zone, this is the zone, wait for scob, so that for this to hold, I must see scob that is intended to break this 5 minute scob. that is intended to break that high. So let's wait and see. So no scope yet formed, and then here we go, we get a scope. So that was the right place to buy it, because it only confirmed that this zone is going to hold and this market is going to continue. So stop loss below here. This market has got no business going upward. I target at least a 1 to 3. I will explain why, or if you've watched my videos you know why. So that was the right entry, but all the same we had already gotten into the trade. So that is how the trade played out. So basically, so let me stop there. So this is the problem. Now you can see, if you got it at this particular point also, it would have stopped you at somewhere here, because you have to trail your stop loss. You cannot give out the market, all of this market, almost 1 to 2, and then you let it just take it like that. You have to trail your SL. So that was the correct entry, or at all, if you got it somewhere here, it must have hit your take profit, because the market again pulled back today. So personally I got it somewhere here, because I knew very well that this range could be starting the mitigation process to come and mitigate down. So I trailed it to somewhere there, to at least 1 to 3. It was more than a 1 to 3 thereabout. So when the market came back heavily there, I got stopped out and I was out of the trade. So why do I need to take 1 to 3? Because of 10 trade rules. Very simple. I just take 10 trade rules, obeying my rules, and then I see how they play. So if you want me to make a video about 10 trade rules, just comment. Even if 3 people comment, just 10 trade rule, and I will make a video about it. Because if you do the maths, with a win rate of about 40 to 30%, you are always net positive. So this trade, this is how I explained it. So this was the process. Whatever I just explained to you is this. This is how it all started. Just before session open, I marked everything like this. Marked everything, then marked everything, order flow here, waiting for 15 minutes to break. So how do I explain it? Daily just experience a change of character. 4 hours fractal high to be taken is quite high, so we can get early entries. You can shift to 5 minutes and take buys whenever the price pushes the order flow or breaks, pushes to the order flow downwards, this order flow downward, or breaks the 15 minutes high, pushes downward here, you shift to 5 minutes and get the trade. It worked. Alternatively, you can equally wait for it to push upward here, then it worked also. So regardless, it worked. So again, here Euro USD buying, doing its magic. So this is how I entered the trade. It was already running almost a 1 to 3, and then eventually I think I left somewhere here. So because today is my birthday, I didn't want to overstretch things, so this is where I left the market, and the market started doing what is called mitigation. Now the trade I took 2 trades. There's another one here, NZD USD. Check the video that I've also uploaded this video, or if you're watching it immediately upon release of this video, it is the next video in the pipeline. Just watch it with the same explanation, we do the same trade here. We don't have different strategies, same things, same trade, same marking, same expectations. And what did I say? NZD USD daily time frame experience change of character. So we are looking, we are back to the bullish again. 4 hours range has not taken the fractal highs for buys, but we can get early entry since 4 hours is already taking the highs of the previous 4 hours candle. So we can take early buys. You can take early buys upon the 15 minutes high being taken, or wait for pullback, to the order flow below, though the order flow don't look high probability. I already made a video of high probability order flow, so this order flow was not high probability. So immediately I was sending this, it was already taking this, and immediately I got an entry. I got an entry also, very heavy drawdown, because I told you the best option is to wait for pullback after taking that, and then to avoid being the liquidity here, avoid being the IDM, you take it on 5-minute scope. I'm going to explain this video to this trade breakdown. If you've not watched it, or if you are watching this immediately, check the video in this channel, you're going to find. So eventually TP smashed heavily, 1 to 3 RR bagged. So this is how it all went.